Earnings pack a punch as investors jump in to buy. In today's cover story, fuel costs are dropping dramatically. Why are airlines not sharing the wealth? Plus, how companies profit on campaigners attempting to connect with voters, and simple ways to block cyber criminals targeting small businesses. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Wednesday, October 22nd. In today's First Look, stocks pick up steam. The Dow raced up 215 points yesterday, the Nasdaq 103, the S&P 37. Gold rallied $4 and oil 55 cents. Yahoo easily clicks past earnings estimates. However, a good chunk came from selling its stake in Alibaba. Yahoo edged higher by about 1% last night. CNBC reports Ford is parting with PIMCO in its 401k plan now that Bill Gross is no longer there. Daimler is selling its 4% stake in Tesla, causing Tesla shares to decline 2% after the bell. And Citibank plans to up customer fees. Starting in January, monthly fees on rewards accounts will increase $5 to $25. Fees for basic checking accounts will go up $2 to $12. Larry Schober of SFG Alternatives joins us now on this Wednesday. Larry, good morning to you.
Good morning.
Let's start by talking about that China cha-ching.
Yeah, unbelievable. The numbers came out no worse than feared. I think they're growing. They're growing at a very high base. It just gave a lot of assurance to the market.
And to give more assurance, the ECB, bada bing.
This is a 3-year plan buying corporate bonds, which not many people really expected. A lot of details have to be worked out. However, it seems like the least path to resistance right now.
Well, everybody has their eyes on earnings today as well. We're starting to get to the bulk of the S&P 500 earnings. What are you watching for here, Larry?
You know, I'm just watching for the bulk of earnings. I mean, just trying to weed out some of the good, like Intel, some of the bad, like IBM, and the semiconductors. But on the whole, it seems like we're on the right track. And if you look at the S&P 500, we're trading at a 14.5 times multiple. People got the correction that they wanted, and now it seems like the macro earnings season is going as planned.
Thank you, Larry. Have a great trading day.
You're welcome.
Starting today, the Department of Homeland Security requires all travelers coming from Ebola outbreak countries in West Africa to fly into a limited number of U.S. airports. The countries include Liberia, Sierra Leone, and Guinea. Enhanced screening of passengers coming from those areas is set up at New York's JFK, Newark, Washington Dulles, Chicago O'Hare, and Atlanta International airports. But it's not Ebola U.S. companies will need to brace for as much as the flu. Chuck Coppola steps in now with more.
Good morning, Angie. Ebola has emerged as one of the top 10 concerns of Americans, but others say it's the flu that's the bigger problem.
You see headlines for Ebola and these deadly viruses that come out really cause there's massive impacts in the financial markets. But often these underlying flus, the small everyday flu, flies under the radar, and people don't realize the actual impact that those flus have.
That was Andrew Challenger of outplacement firm Challenger Gray and Christmas. The Centers for Disease Control estimates that each season influenza costs the nation's economy $10.4 billion in direct costs, such as hospitalization. The number does not include indirect costs, though, such as worker absenteeism, which costs the nation an estimated $7 billion each season. Health experts stress that the flu can best be handled preventatively with a flu shot.
Filling prescriptions at stores selling cigarettes could soon mean an additional copay. CVS Health stopped selling cigarettes last month. Now, its pharmacy benefits arm, Caremark, is considering charging customers an extra copay of up to $15 for buying meds at stores that are not tobacco-free, such as Walgreens. CVS and Target pharmacies are considered tobacco-free. It's estimated CVS will lose about $2 billion in sales by not selling smokes.
In today's cover story, several U.S. airlines are raising base fares about $4 in most cases. And it coincides with the lowest jet fuel prices in 3 years. That combination has rallied airline stocks, but some passengers wonder when they'll see benefits along with investors. First, JetBlue raised round-trip fares by $4. Delta Airlines followed, then Southwest, American, and United.
When you hear about things like people raising their prices on purpose, even though they got lower jet fuel prices, it makes you kind of not want to book them either. There's price gouging. The gas stations do it all the time, and I don't go to those gas stations.
The price hike is not the result of increased fuel costs. In fact, oil prices, which affect jet fuel prices, have dropped 20% since early summer. Instead, higher airfares are described as a test by airlines to measure demand and the public's tolerance.
Airlines are always probing to raise ticket prices. Typically, they're trying to probe to see if consumers will go ahead and lift up, be able to pay more for those, and they're also seeing if their competition will come along with them.
Personally, a cheaper ticket would benefit me more. However, I understand that there are investors and people with pensions that are invested in these various airline companies, and then that benefits them as well.
Airlines are selling off hedging contracts for fuel, and consolidation of carriers has created less demand for hedging in general. Those are important concerns for plenty of passengers who are also investors in airline stocks. Recently, all 5 that raised fares have done very well. Here are the closing numbers for American, Delta, JetBlue, Southwest, and United. All of them up for the 4th straight day.
They're keeping, I guess, those in their back pocket happy. You know, it's keeping the prices up, and people are still going to fly regardless.
From now through the rest of the year, it's estimated that as many as 21 million Americans will fly home for the holidays or to an end-of-the-year getaway. So far, online flight guide Hopper.com reports flights during the holidays costing about 2% less than they did a year ago.
As airfares soar, mortgage rates are falling, and it may spur more Americans to buy homes. Mortgage rates just hit the lowest level of 2014. The 30-year slipped to 3.97%, the 15-year to 3.18%. Mortgage rates are dipping on tumbling yields following a rush to buy bonds last week as volatility rocked the stock market.
Ultimately, the Federal Reserve is going to pull back on some of their quantitative easing stimulus. That's what everyone's been expecting. So everyone had been expecting for mortgage rates to start to rise in anticipation of the removal of some of that monetary stimulus. And that hasn't happened. And that was a bit of a surprise to most people in the market.
Danielle Hale of the National Association of Realtors adds lower mortgage rates attracted home buyers in September and should continue to in October. She also says many investment buyers have pulled out of the housing market.
What did the New York Federal Reserve know? When did it know it? And perhaps most importantly, why didn't it act? Those are all questions being raised by the central bank's Inspector General about J.P. Morgan's $6 billion blunder uncovered in 2012 that came to be known as the London Whale case. The new report says the Fed knew as early as 2008 about the risks J.P. Morgan was making, but failed to act on that knowledge. New York Fed responded that it is committed to improving supervision, but that it also takes issue with certain aspects of the report.
Banks with traders who allegedly rigged foreign exchange benchmark rates could face $41 billion in penalty fees. According to an estimate by Citigroup analysts, Deutsche Bank could be looking at a $6.5 billion fine, Barclays $4.8 billion, and UBS $4.6 billion. Yesterday, a report surfaced that Citigroup is buying Deutsche Bank AG's metals and energy trading books. The report says that Citi wants to expand its commodities hedging business.
Encouraging news on employment. The Labor Department reports in September, payrolls rose in 39 states and the unemployment rate dropped in 31 states. Texas, Illinois, and Colorado are among the states adding jobs at brisk levels, while Vermont and Massachusetts were the only states with significant job losses.
The CEO of McDonald's says changes are in store. McDonald's turned in dismal earnings. Profit plunged 30% in the third quarter. Sales fell 3.3% worldwide. Asia was hit especially hard by the meat supplier scandal involving repackaged expired beef sold at McDonald's restaurants there. CEO Don Thompson says the strategy going forward is to simplify McDonald's menu so restaurants can offer options best suited for the regions. Plus, expand Create Your Taste, allowing customers to choose buns and toppings using a touchscreen. Shares closed just above $91.
Hoping to add some effervescence to its sales, Coca-Cola will slash costs. The soda maker says it will cut $3 billion in costs by 2019. The move comes after disappointing sales in the third quarter, down 1% in North America. Main rival PepsiCo has also exercised cost-cutting measures as consumers continue to drink less soda. Coke shares lost 6% yesterday.
Also in our earnings watch, Verizon fell short on estimates but reported double-digit growth off healthy demand for broadband and wireless service, especially for new tablet users. Shares closed last night with a slight gain of 21 cents. United Technologies stock also staged a minor rally as the company reported earnings that exceeded analysts' expectations. Harley-Davidson managed to cruise past Wall Street estimates, but the motorcycle company shipped fewer bikes due to supply chain hang-ups. That stock did really well, zipping 7% higher.
Kimberly-Clark plans to cut up to 1,300 jobs. Consumer products company known for Kleenex and Huggies says it hopes to save $160 million as a result of the cutbacks. Kimberly-Clark also cut its 2014 profit forecast to factor in the spin-off of its healthcare business. The company reported growth in sales and profit. The spin-off of its healthcare business becomes official on Halloween.
Uber drivers plan protests across the nation today. Included on their list of complaints against the company, the reduced fares and the tipping policy. In July, Uber reduced fares, making the service a cheaper option than hailing a taxi. On the economic calendar for today, it's the MBA Mortgage Index, CPI, and crude inventories. On the earnings calendar, GM, Revlon, the Cheesecake Factory, Boeing, CoreLogic, Dow Chemical, Angie's List, Xerox, Wynn Resorts, Abbott Labs, Boston Scientific, AT&T, and Yelp. Still to come, why this week's big earnings could also be a glimpse into the bigger picture of the economy. Plus, behind the shifting landscape of campaign finance and the new sneaky ways that hackers are getting into small businesses. Starting to sound like a broken record. Yet another hack attack to report. This time it's office supply chain Staples. The retailer says that it is investigating what it calls potential issues with customers' credit card information. Staples is far from alone. In the past year, Target, Neiman Marcus, Home Depot, Michaels, P.F. Chang's, and J.P. Morgan have all had similar attacks. Bill Mahler has more on how cyber criminals are breaking into small businesses.
Well, Angie, another hack to report. Now, this one isn't after credit card data. This one goes after mostly small businesses by getting into their systems through their internet phone connection. You know, last year, businesses lost more than $4.5 billion through this particular vulnerability. Jerry Irvine is the president and CIO of Prescient Solutions and was a member of the Cybersecurity Task Force. Your company, you've worked on this particular problem. How does it work, in fact?
Well, IP phone systems are connected to the internet. Just like anything connected to the internet has the ability to get hacked. Most of the time it's because passwords have not been set to be complex, default user IDs and passwords are left in place, or systems aren't being kept updated.
So the bad guys get in through the phone system. How far into a company's proprietary information can they get?
Well, once they're in the phone system, they could get to the entire network if it's not segmented from the rest of your network. And unfortunately, most people today will just have one network. They plug everything in. So I can get into your phone, get into your PCs, or get into your PCs and get into your phone.
So they're taking, what, phone minutes and then reselling them?
Well, what they do is they actually gain access to your IP server, and then they sell cards, prepaid phone cards with access to that IP server, or they redirect lines to use and originate phone calls from your IP server itself.
The incentive to get things fixed is that the end user, these little companies, are the ones holding the bag. They've got to pay all the losses.
Yeah, unfortunately, it's not like credit cards where if your credit card is stolen, the credit card company will reimburse you or pay that for you. If your phone system gets hacked and you get a bill, you get the bill. The phone company has no legal obligation to pay you back. And so these hackers are going out there, they're pre-selling your phone data and then giving you the bill.
I was surprised at how simple the steps are to actually prevent this from happening.
Yeah, it really is. Most of these are occurring as a result of weak user IDs or passwords or the default user IDs and passwords. Additionally, the systems are basically Linux systems, and many of them are open source Linux systems, so you have to keep them updated. There are known bugs that are out there for it. And then the last thing would be maybe segmentation, so don't have your phone system on the same network as your PCs.
Simple, and businesses now are warned. Jerry Irvine, thanks so much.
Thank you.
Coming up, will earnings shed light on what's down the road for transportation stocks? Plus, after the break, what it takes to win an election in the digital age. staggering $1 billion will be spent on midterm elections for the House, Senate, and gubernatorial races, and that's just for TV airtime. Paul Eggers takes us to North Carolina, where companies are capitalizing on competition for votes in local elections.
Take a drive around Asheville, or really anywhere nowadays, and you're likely to see a cluster of campaign signs, with state rep, sheriff, and school board candidates all trying to grab your attention to gain a little name recognition.
Political printing will probably always be there.
Presses are running at BP Solutions Group in western North Carolina, doing some direct mail work for local candidates, the kind that may be filling up your mailbox these days.
Those are nice jobs. I think direct mail has proven to be a very effective way of reaching the voter.
While traditional printed material may always have its place, the growth of the internet, especially through access on ever-present smartphones, has changed the way candidates can interact with voters.
What we're doing is changing the way that campaigns can operate. They can now reach so many more people if they're using our technology. They can reach thousands, hundreds of thousands of more people than they could beforehand, and they can have a lot more dialogue with it.
Charles Carter is a principal at Link to Tech, a communications and technology firm that allows candidates and political parties to connect and interact with voters through email, phone calls, and text messages. He also won 2 elections as a North Carolina state senator, so he knows the limitations of traditional campaign methods.
I walked in and I introduced myself and I started to do my pitch, and she said she never heard of me, and then I looked down next to her where she kept all her magazines, and there were 5 of my mail pieces sitting there.
As business at BP Solutions Group proves, candidates still rely on tried and true mailers to connect with voters, leaving new businesses like Link to Tech with an uphill climb in the competition for campaign cash.
Finding how to shift those finances within that business model is going to be the real interesting part of this.
One other notable trend, the more competitive the race, the more money pours in from outside groups. Still ahead, the sector that could drive the stock market higher or stall it out. Chart Talk is next. Talk this morning, a look at transportation stocks. Joining us now, Joe Keenahan of TD Ameritrade. Hello, Joe.
Good morning, Angie.
The transports, as you know, have been key to this market. So what specifically are you looking for as a trader?
Well, first of all, as you said, the transports have been very key. If you look at the NASDAQ Transportation Index, is well above 3250 as of yesterday's close. With that, we have some big earnings this week. You have Caterpillar, GM, Ford, Boeing, all over the next few days. So these will be key companies to see how the transports will continue to, if they will continue to perform for not only this quarter, but obviously for the rest of the year. And I really, the folks who trade those might be interesting earnings calls to listen in on to see how the CEOs place some of the roadblocks that may be ahead of them and what they see for the future of those companies.
Of those names, which one would you gravitate to the most? Would it be Ford, GM, maybe even Big Cat? They've had some issues globally, but what do you see happening?
Well, if you do believe that we are going to recover globally, I think Caterpillar is actually the one. You hit it right on the head. What's interesting to me is you have Caterpillar trading right around $96 right now. We've seen a lot of speculators on the 100 line, so people thinking that earnings are going to be good. What I think they're actually thinking is maybe not the earnings beat, but the statements about what's going to go forward and the potential for Caterpillar worldwide. To me, that's the most interesting and kind of sets the tone for what we could see for the rest of the market.
Joe, do you see Caterpillar as more of a trade or a buy and hold?
Well, it's interesting. I think there's 2 schools of thought on that. I think traders will gravitate towards it because there is earnings. And whenever there's earnings and interesting news, traders tend to come in. For those who are more buy and hold, this is one with an interesting yield, particularly as you see the 10-year just above 2% right now. So I think what you've seen over the last few days is many folks come in here, they thought it might have gotten overdone to the downside late last week. You had a very nice rally yesterday. So this has always been a favorite of the buy and hold crowd, so to speak, and they've had nice growth. It'll be interesting to see if they can break this 100 level, because there is going to be some resistance there for those who do go out and buy it.
Great information. Thank you, Joe.
Always a pleasure, Angie.
Coming up tomorrow, it's movies and money from worst to winner. Now that the summer slump is in the past, Hollywood is headed for its best fall ever. The fury at the box office is on tomorrow's show. From all of us at First Business, have a wonderful Wednesday.